Welcome to the Explainer. All right, let's talk about debits and credits. And look, if you've ever felt like they were intentionally designed to be confusing, you're not alone. It totally feels that way, right? People try to memorize all these crazy rules. But what if I told you the entire system is built on one single, incredibly simple idea? That's what we're going to do right now. We're going to demystify this thing for good. So let's just start with the main event. I want you to try and forget everything you've ever been told about increase this or decrease that. Just for the next few minutes, hold this one single question in your mind. What if debit and credit were just fancy, old-timey words for left and right? Okay, so before we can really dig into the whole left and right thing, we need to set the stage. We need to understand the playing field. And in the world of accounting, that playing field is one perfectly balanced equation. This thing is the absolute unbreakable foundation for everything else. And here it is, the single, unshakable truth of all business finance, the accounting equation. It's actually super simple when you think about it. It just says that all the stuff a company has, its assets, had to come from somewhere, right? It didn't just appear out of thin air. It was either paid for with borrowed money, those are the liabilities, or it was paid for by the owners, and that's the equity. That's it. It's a closed loop. This visual is the best way to picture it. Think of it like a scale. Assets on one side and liabilities and equity on the other. This scale must, and I mean must, always stay in perfect balance. Every single transaction, no matter how complicated it seems, is just about making sure this scale stays perfectly level. That's the whole game. So, with that image of a balanced scale locked in our minds, let's get to the big reveal. We're about to toss out all those confusing conditional rules you might have heard. We're going to replace them with one simple, spatial idea. This is where it all starts to click. Just look at this. On the left, you have the total mess people try to cram into their brains. Wait, does credit mean increase or decrease? It depends. It's a nightmare. Now, look at the right. The simple truth. Debit just means left. Credit just means right. The end. No exceptions. No sometimes. Always. And this is why that works. It's not just some random rule. See that big letter T? Accountants call that a T account. And it's literally just a mini drawing of the accounting equation itself. The assets from the left side of the equation go on the left side of the T. The liabilities and equity from the right side go on the right side of the T. The structure is exactly the same. Okay, I can hear you thinking, great, left and right, I get it. But how do you make things go up or down? That is the perfect question, and this is the last piece of the puzzle. This is the one functional rule that makes the entire left-right system actually work. It all comes down to something called the normal balance. Now, that's just a fancy term for an account's home side, and all it means is this. To increase any account, you just put the entry on the side where it normally lives in our big equation. So since assets live on the left, you use a debit, a left side entry, to make them bigger. And since liabilities and equity live on the right, you use a credit, a right side entry, to make them bigger. So the key is, an account's normal home is the side you use to increase it. And right about now, a big question mark is probably popping up over your head. I get it. Hold on. If a credit makes a liability go up, but it makes an asset go down, isn't that a huge contradiction? It's an excellent question, and it gets right to the heart of why people get so tripped up. And the answer is no, it's not a contradiction at all. And the reason is, remember the scale. Nothing happens in a vacuum. We're not just increasing or decreasing an account for no reason. We are performing a specific action on either the left side or the right side of the scale with one single goal, to keep it in perfect balance. All right, enough theory. You can talk about this all day long, but the real beauty of this system is when you actually see it work. So let's walk through a few examples and watch how this left-right logic plays out with some real business transactions. So here's the flow we're going to follow. First, something happens in the business. Second, we ask ourselves, okay, how did this affect our balance scale? Third, we post those changes to the left or right side of our little T accounts. And finally, we record the whole thing in what's called a journal entry, which is really just the official note of our left and right moves. Okay, first example, a classic. You start a new business, and you put $10,000 of your own cash into it. Let's think this through. How does this affect our scale? Well, two things happened. The business now has more cash, right? Cash is an asset which lives on the left side of our scale. So the left side just got heavier. At the same time, the owner's claim on the business, their equity, also went up, and equity lives on the right side. To increase the left side, we debit it. To increase the right side, we credit it. And boom, the scale is perfectly balanced. All right, let's try a slightly different one. The business needs $500 worth of supplies, but it doesn't pay cash. It buys them on account, which is just business talk for I'll pay you later. So what does that do to our scale? Easy. The business gained a new asset, supplies. That's on the left side, so the left side goes up. How do we make the left side go up? We debit it. But at the exact same moment, the business also gained a new debt, a liability, called accounts payable. And that lives on the right side. So the right side goes up too. How do we do that? We credit it. And once again, perfect balance. Okay, now pay close attention to this one, because this is the example that makes it all snap into place. The business is now going to pay off some of that debt. It's using $200 of its cash to lower what it owes for those supplies. Let's trace the logic. Here is where the magic happens. The business's cash, an asset on the left, went down. So how do we decrease a left side account? We have to do the opposite of its normal increasing action. So we hit it with a credit. At the same time, the company's debt, a liability on the right, also went down. How do you decrease a right side account? You do the opposite of its normal move. You hit it with a debit. Did you catch that? A debit decreased a liability, and a credit decreased an asset. And our scale is, you guessed it, perfectly balanced. So let's just zoom out for a second. When you step back from all these individual moves, you start to see it, don't you? This isn't just a bunch of random rules someone made up. It's this incredibly elegant system of symmetry. It's a perfect reflection of the give and take that happens in every single business deal. And that's really the big takeaway. This method, this idea of perfect balance that was figured out by Italian merchants over 500 years ago, is so logical and so robust that it is still the engine that powers every single part of the global economy, from your corner coffee shop to the biggest corporations on earth. And now you get it. You understand how that engine works. So I'll leave you with this thought. The confusion around debits and credits wasn't a problem with the system itself. It was just a problem with how it was explained. Now that you can see the simple, powerful logic hiding underneath it all, it kind of makes you wonder, right? What other brilliant ideas are out there, just hiding in plain sight, waiting for us to look at them from the right perspective?